Ladies and gentlemen, welcome to another episode of our weekly investor forum. I'm your host, Rachel Curlew, AVP of Investment Banking. Today, we're discussing WIGTON Energy Limited's Q4 results, and who better to join us than the CEO himself, Gary Barrow. Welcome back to the program, Gary. We're also joined by our CEO, Patrick Bataille, CEO of Mayberry. Thanks for joining us today, Patrick.
Glad to be here, Rachel.
If you like the content, don't forget to hit the like button and share this video. If you haven't subscribed as yet, go ahead and hit the bell to receive all notifications. We upload content like this once per week. It's about that time that you embark on your investment journey. Patience wins the game, not speed. That means the earlier you start, the better. And why not make that first step with Mayberry Investments Limited? Follow us on social media today to get started. And don't forget, we have a Q&A segment at the end of the program, so make sure you submit your questions so we can address them at the end. So just a little intro on Gary. He has over 30 years experience in the telecommunications and electricity industries in the region. And in addition to his business expertise, he has a background in multidisciplinary background in engineering, finance, technology, innovation, business transformation, process reengineering, governance, and people management. And prior to joining WIGTON, Gary served as COO at JPS, where he led enterprise-wide strategic planning and executed some of the game-changing projects in their digital transformation and other business innovations. Gary holds a Bachelor of Science in Electrical Engineering, a Master's of Business Administration, and has completed global leadership development programs with INSEAD in France, UK, China, Spain, and the US. So he's bringing a wealth of knowledge and experience to the WIGTON team. So let me go ahead and get into the presentation. We will be discussing WIGTON's 9 months performance ending September 2024. But just a little disclaimer, MJE, which is Mayberry Jamaican Equities, a related party within the Mayberry Group, is the largest single shareholder, holding just about 9% of WIGTON's ordinary shares. So now that we've spoken about that, let's get into it. So we're seeing here that WIGTON reported an 8% dip in revenues to 1.3 billion, down from 1.5 billion in the prior year. Management noted that this decline is attributed to a 10% dip in wind production and a 14% reduction in availability due to the downtime from Hurricane Beryl. But I believe they got some funds, about 250 million, in business interruption insurance that should have cushioned some of that downtime. But a key point that I want to note, though, that there was a 17% decline in revenues quarter on quarter. So we'd like to understand what's happening here. So that'll probably be my first question to Gary at the end of the program. Moving on to cost of sales. Cost of sales declined 12%, leading to a 4% drop in gross profit to 710 million. Other income, which isn't displayed in the table here, that increased 181 million, likely stemming from the interest income on the 2.7 billion cash we're seeing on the balance sheet. Operating expenses, however, rose by 16%, leading to a pre-tax profit of 304 million, but this is actually a major improvement compared to the 178 million reported the previous period. But I mean, despite this improvement we're seeing in pre-tax profit, net profit declined by 53% to 228 million. But, you know, we mentioned this in the last forum. This is attributed to a one-off taxation credit that WIGTON received of over 300 million last year. So we need to appreciate that point. But for the quarter only, WIGTON did report a loss of 84 million, a further decline on the 13 million loss reported for Q3 of last year. That's the December 2023 quarter. But on the second slide, we can actually visualize the company's quarterly performance a little better. The column in green represents the profitability for the quarter that we are comparing. And we are seeing here that they booked a net loss for the quarter of 81 million compared to a net loss of 13 million in Q3 last year. So revenues are down 17% and they turned a loss for the quarter. So we definitely want to understand what's happening here a little later down in the program. But moving back to the first sheet, looking at the balance sheet, total assets are down 4% year on year to 9.9 billion. This was driven mainly by a 750 million reduction in cash. So we are seeing here that WIGTON has started to utilize some of its cash. I recall the start of the year, they had about 3.5 billion in cash and it's now down to 2.7. So we'll have the opportunity to ask Gary how they have deployed this cash during the period. Turning to shareholders' equity, we're seeing here there was an 8% improvement, bringing that total to 5 billion. And we're also seeing improvements on the liabilities side. There were reductions in liability. It now stands at 4.5 billion compared to 5.3 billion last year. So, this resulted from the company paying down some of its long-term debt as they aim to improve their financial stability. But overall, WIGTON remains a robust company with trailing revenues of almost 2 billion and trailing profits of 776 million. I'm actually speaking from the key stats table here. The stock is trading at $1.24 with a corresponding PE of 23 times relative to the main market PE of 9 to 10 times, which suggests the company is either overvalued or the market is simply pricing future earnings into the mix. I support the latter here. As we know, WIGTON was awarded a 50 megawatt solar power project, which will, I'm assuming, increase their capacity by more than 50% in the upcoming quarters. So I believe shareholders are definitely pricing future earnings into the mix here. The stock went as high as $1.70 within the 52-week period, and it's comfortably trading at $1.20 now. The company continues to generate healthy cash flows, throwing off about 442 million in cash from operations. And as I mentioned earlier, they continue to operate with healthy leverage. I believe the leverage ratio, debt to equity ratio, is at about 63%. And they released in December that CarChris has even reaffirmed their ratings on the company's bonds. They have maintained a stable outlook for WIGTON with a BBB plus rating, which is great. The company remains positioned for growth. They are the largest renewable energy company in Jamaica with a market cap of 13.5 billion, and they are the largest renewable energy by wind in the Caribbean. And as Jamaica continues on its path to 50% renewable energy by 2030, WIGTON will just continue to grow in that regard. So great company, great potential for growth, and I'm sure Gary will just continue to strengthen that position as we go through the Q&A segment. So again, don't forget to post your questions in the chat. So I'm going to go ahead and get started with my first question to you, Gary. And that would be, I mentioned earlier that the production dipped 10% for the period and 14% in availability for the period, but it dipped 17% for the quarter alone. So I want to understand, what's the main driver here and what are the steps being done to mitigate against this?
Okay, good evening, Rachel, Patrick, and other viewers. And it's good to be here again to talk about WIGTON. Yes, so, as we had mentioned in the previous meeting that we had, the previous forum, we did have some impact of beryl. Our plant is situated in South Manchester. And of course, the South Coast took the brunt of Beryl, and that would have, resulted in some of our main transmission lines going down. Some of our turbines were impacted, particularly those, the older turbines associated with WIGTON 1. And so it would have taken some time to get back those transmission lines functional, to get the turbines up, do the testing. In some instances, we had to wait on parts. And so we lost some production there, no doubt about it. But we have a great team on the ground. They have worked assiduously, they have worked around the clock, and they are able to restore a number of the plant very quickly. I would submit that where we are right now, we are back to sort of pre-burial availability, so the production is up. Of course, while the production was down during that period of restoration, it would have impacted our revenues. We have accrued an amount associated with insurance. We're still sort of going through that process. But I would say that we are pretty much back to where we were before burial. In fact, maybe a little bit ahead in terms of availability.
Okay, perfect. Thanks for that. And yeah, I did note that you got 250 million in the business interruption to cushion some of that downtime that you had. Great. But I am also noting that you have a 16% increase in operating expenses. So are there specific areas of the business that are seeing more significant cost increase?
Well, as you know, we are a company in transition. And, prior to now, certainly last year, we were focused on really running the wind farm efficiently. We have made a number of adjustments in preparation for the growth. You would have mentioned, of course, that we were awarded a 50 megawatt plant, solar plant. In addition, WIGTON 1, we will be repowering it with solar. So over the next 2 years, we will in fact have 70. We'll be building 70 megawatts of solar to add to the grid. You'd have seen that we would have changed our name from WIGTON Wind Farm to WIGTON Energy. And in that preparation, of course, we would have been spending more on marketing, repositioning the company. We have hired several new staff members to assist with this transition. We have a new chief commercial officer who is driving the marketing and business development, particularly in the area of commercial and industrial customers. So what you're seeing here is expenditures prudently associated with our intended expansion in the future, and really to support our new strategic intent, which is growth through diversification.
Okay, great. Thanks for that. And you said the additional 70 megawatt new capacity that's going to come on stream in the next 12 months.
In the next 2 years, so 50
2
megawatt of
years, got it.
additional production, and we will be repowering WIGTON 1, which is about 20.7 megawatts of wind right now, with 20.7 megawatts of solar energy, which is, as you can imagine, would be good for the customers, because the cost of solar has fallen dramatically. So there will be a tariff advantage going with solar versus wind at this point in time.
Great. So it's about time I switch over from from my electricity. I need to start using some solar. Patrick, I'm going to throw a question out to you.
Thanks, Rachel. And Garrett, great to see you again. So talk to me about debt management. I see that there was a significant decrease of roughly 15% in debt, in liability. How's the company managing its debt? What's the future plans?
So thanks for that, Patrick, and good seeing you also again. So the reduction there is primarily driven by the fact that in 2022, we actually refinanced our debt. So we have two major sets of bonds. It was restructured so that we make quarterly principal payments as well as interest payments. And those have, been paid down in a significant way. You're seeing that reduction. So that is where that is coming from primarily. But I should add, in respect to, going forward, that we are currently in the market for financing the 50 megawatts and the 20 megawatts. And so while we have seen a significant reduction there, there is an expectation that as these projects come to fruition, that they will require some amount of debt and equity financing going forward. So you may see that dynamics change a bit going forward as we look to finance these really major projects.
Okay, great. Got it. So the capital structure will be changing over the next 24 months to factor in repowering of phase one and the newly awarded 50 megawatt project that will be coming on board. So you mentioned that both the entire capital structure, both the debt and the equity will change. So do you have enough equity in place to undertake these initiatives?
Well, we are in discussions with financial institutions now. As you can see, we have a really very healthy balance sheet with a significant cash balance. All that being driven by, I would submit, a well-run company and a very profitable company. Making prudent decisions around dividend payment, but also retaining some of that cash for future development. So we're in a really very good starting position. We are still looking at our financing structure. We believe that it's going to be somewhere between 20 to 30% equity and somewhere in the region, obviously, of 70%, 80 to 70% debt financing. So we're currently looking at that structure. We will ensure that the mix of debt and equity is optimized. And so that is something that we'll be doing over the next 3 to 6 months in terms of finalizing our debt financing structure and partners.
Okay, great. I was actually picking your mind to see, if in that cash that you have on your balance sheet, if it's enough to cover the equity position, and if you have an APO play in the makings. But let's wait to see what happens in the next 6 months. So I want to go back to the 50 megawatt project. We're assuming as analysts that this will improve WIGTON's capacity by 50%. So, am I correct here in my assumption?
Well, we have about 62 megawatts now. So we're going to be replacing 20.7 megawatts with 20.7 solar. That would leave us with approximately 40 megawatts of wind, and we'll end up with 70 megawatts of solar. So really, that is the ratio we're talking about. And, it's very important to us. We recognize that, revenue diversification is not only prudent based on how technology is advancing and how the price of batteries are going down and panels, but also it will give us some, risk mitigation in respect to the geographic diversification and just really having, multiple sources of revenue. I don't think it is ever a good thing to have a single source of revenue. And I think Beryl has taught us some lessons in that regard. So I think from, many different strategic angles, it is the right decision to really diversify our products and services, just in terms of prudent business management, but also, in terms of risk management. Sometimes the sun isn't shining, but the wind is blowing, and vice versa. So that is a key component of our strategy going forward. And of course, while we speak, Rachel, about the 50 megawatts and the 20 megawatts of repowering, we are pushing very hard in the commercial and industrial space. We have some clients already. We have worked with our joint venture partner, IEC, and we're responsible for, well, you have seen those solar panels going out to the Norman Manley International Airport.
Yes.
We're working on a big project in Montego Bay. We have done a hotel, and there are some others you're going to be hearing about pretty soon. So it's not just revenue diversification at the utility scale, but we are also looking at our market segments and pushing into areas that we weren't traditionally in.
Great, great. Thanks for that. Patrick, I'm going to throw another question at you.
Sure. Thanks, Rachel. So we have looking at your numbers, about 14% in finance expense declines. Tell me about what's driving that, and do you expect the trend to continue?
Yeah, Patrick, that is just directly as a
Nell. So I'm trying to get a sense of the impact of burial on WIGTONs in terms of profitability and cash flow. So I mentioned earlier that production was down 10.6% and availability was down 14.3%. Can you say how much, broadly speaking, how much was due to the hurricane versus change in weather patterns versus old aging equipment?
All right, so Rachel, if you look at the 9 months results, you'll see that actually we are ahead when compared with the corresponding period last year. Once we take into account the production, even although it was low, that we would have, and as you mentioned, we would have had a provision of about 250 million. So we would have to add that into the total figure, because that really represents a production that would have been lost as a result of burial, as well as other income, as you mentioned, mainly interest driven, as well as the projects that we would have done outside of the utility scale. So we're actually 3.2% overall total revenues compared with last year. So certainly that is good news. So despite the impact of burial, take into account the accrued revenues from the insurance, we are slightly ahead of last year.
Okay, great. And you said accrued revenues. You've made a provision for this claim. When will this claim be settled?
So we have been working through it. I actually believe that we got a partial payment just today. So we are working through that. They're finalizing the final figure, but as you know, with insurance, until the final figure is settled, they go through a process. Once they can verify certain information, they make interim payments. So we got a substantial payment just this week, and that is something that will continue until it's finalized, and we expect that to happen certainly by the end of this month.
Okay, great. So I have an insurance claim figure in my head of 240 mil. So there's a possibility there may be more to come.
Quite possibly, yes.
Great.
That may be on the more conservative side, but again, we'll wait the final figure.
Great. So I want to go back to, as Jamaica aims to target 50% renewables energy by 2030, the country will need at least 300 megawatts of new renewable energy plants. Am I correct here?
All right.
And
So
I have a follow-up question to that.
Yeah. So yes, we're going to need a lot more renewable to hit that target. Just want to make the distinction between capacity and energy. Typically with wind plants and solar, the sun isn't always shining, the wind isn't always blowing, so you can have a capacity built, but the capacity factor, which is the amount of energy that is generated, is really what matters. The amount of energy, renewable energy, that is contributed to the consumption in the overall mix. So yes, we are really very pleased with the government's aggressive posture for more renewables on the grid. We believe it's a good thing for Jamaica. It's clean, it's green. The technology is moving in a direction that is making it more accessible. It's making it cheaper. Here at WIGTON, we are really, really very strong on sustainable development. And we see, we have positioned ourselves to capitalize on certainly the policy direction of the government combined with all of the opportunities that industries is presenting. So while we would have won 50 megawatts, while we are repowering WIGTON 1 with 20.7 megawatts of solar, we expect the GPE, that is a general procurement entity, to come out soon with further RFPs this year, possibly going into next year, with significant requirements for additional solar and perhaps other forms of renewable energy to be sold to the grid. And we intend to participate, as we did with the last RFP, to participate very aggressively in that space.
So based on your experience, would you say they'll be putting out maybe 100 megawatt bid this year?
We have heard a figure of 168 megawatts as the next trans, but again, that is the purview of the GPE. Our responsibility right now is to be prepared to respond and to win those bids going forward.
Okay, great. So 168, I'm going to assume WIGTON will be awarded another 50 megawatts. So, that
Certainly
will,
hope so, and we will be pushing for that.
great. So that's going to significantly boost your capacity, and I trust that the availability will be there as well, which will ultimately improve your profitability. So that leads me to my other question, as we approach 2030 and the RFPs are coming out, WIGTON, they're winning the bids. How will the company manage a balance between rewarding shareholders through dividends and reinvesting to take advantage of the opportunities?
So, the ultimate decision of dividend payment is the responsibility of the board, with the recommendation of management, of course, or the input, I should say, of management. And for many organizations, there are a number of factors that are considered, taken into consideration. We at WIGTON certainly want to be able to meet the expectations of our many shareholders, large and small. And there is an expectation that dividends will be paid. And we do have a robust dividend policy in place. But we also do recognize that we are a growth company, that we have several large projects ahead of us that will require financing. And in the same way we have the short-term interest of our shareholders, we also recognize that our shareholders want to ensure that there's a long-term benefit to holding the WIGTON shares through the growth expectations. And so we take all of that into consideration in terms of the short-term dividends, but also knowing how much of our retained earnings we're going to hold back to make investment in projects that are growth oriented, that will ultimately go back to our shareholders in dividends.
Okay, got it. And I mean, it's customary once companies are on an aggressive growth trajectory that you will be coming on now. We're not going to be expecting that much dividend payouts. But I mean, we're thankful as shareholders. We have gotten quite a bit on the capital appreciation side, and the stock trades good in volume. So, persons are in and out as they see fit. So we are grateful for that bit. Patrick, do you want to go with one more question before I see what's going on in the live chat?
No, Rachel, actually, I was looking at the live chat, so I'll give it back to you to
Okay,
go with those questions.
perfect. All right. So my first question here is from Jerome. What's the timeline for the 50 megawatt project to be complete? I'll actually take this one. Gary indicated that both phase 1 And this 50 megawatt, we can probably call it WIGTON 4, phase 2, phase 4, in another 2 years, so 24 months, we can expect the completion of those two projects. And as he indicated, they'll be continuously bidding on RFPs that come out. So we'll probably be having 12 to 18 month lags between each project. I'm going to assume here. Am I correct here, Gary?
Yes,
Okay.
so it really depends on when the RFP comes out. There's typically a process of evaluation, expression of interest, and question and answer period and so on. So I think once the award is given and the license issued, then you go through a process where you sign a power purchase agreement with the single buyer, in this case, GPS. There are engineering designs that need to be completed. There are EPC contracts that has been negotiated, land deals, environmental permits. So yes, that will take a little time. So it really depends on the timing. It won't necessarily be 2 years and in 2 years. If it comes out this year and that process is completed this year, then of course the clock would start at the point that the award takes place.
Great. Thank you for that. Another question here from Unbothered Chico. Is the solar energy farm in Content Clarendon still operational?
Yes, WIGTON Energy is not associated with that farm, but yes, I know that it is still operational. It is a 20 megawatt solar farm, and yes, it is.
Okay, great. Thanks for that. And another question coming in from Ramney Thompson is if the government was supposed to put out another RFP, would WIGTON apply? Yes, we've got that answer. Absolutely. We're anticipating 168 megawatt RFP to come out this year, and we have our fingers crossed. WIGTON will be awarded another 50 megawatts, if not more. Great.
Correct.
Perfect. So another question from Jerome. Will the switch to solar for phase 1 allow you to earn a higher profit margin on that phase?
So the process that we go through is one where, and this is where the GPE comes in, one where the bid, the winner of the bid is the one that provides the lowest cost of energy. We would have certainly set some internal return, some hurdle rates internally that would be compatible with what we would have had in the past for wind. So we can expect a similar level of profitability based on those return hurdle rates that established internally.
Okay, but as we are adding capacity to the WIGTON's back P&L, we are improving everything. So I'm assuming by 12 to 18 months, we can get back to the profitability that we're seeing in 2019, 2020, in the 500, 600 million. We're now at 220 million.
Yes.
Yeah.
And as you mentioned earlier, I mean, a big part of that in terms of the difference between prior year and this year is that special tax credit that we got, which was really a deferred tax credit based on, the 33% that we had accrued our tax for in previous years. So that is a big driver. Certainly going forward, the team is really focused on ensuring that we maximize profit. We have gone through a recent strategic review of our business, and we have decided to focus on 5 major pillars. First being great at the fundamentals. We're going to be bringing in the latest and best technology to run the operations, whether it is wind or solar. We spoke about the second pillar already, which is growth through diversification, and we have had a lot of discussion today about that. We have also spoken about, bringing in the right skills and having the type of development that is necessary to ensure that we are market leaders. So we're going to be running an agile organization with a competitive mindset. Many of you would have started to see billboards for WIGTON Energy around that certainly there before. Our Instagram, LinkedIn, our social media is on fire right now. And we are having discussions with several strategic partners, both in terms of on the supply chain side and also in terms of partners that will work together to deliver on certain projects. So yes, we are really very, very excited about the future. And shareholders can rest assured that there's a great management team running this company going forward.
Great, thanks for that. And as you're in the last quarter of your 2025 financial year and you're going into the 2026 financial year, I'm too excited, as a shareholder, to hear what plans you have in store and what diversification initiatives you're going to undertake.
Yes, so really, the big one, of course, is building 70 megawatts. That's a really big project. Right now, we are the largest renewable supplier in Jamaica and the largest wind farm in the English-speaking Caribbean. And our objective really is to be the largest renewable energy provider in the Caribbean. So as we mentioned before, we're going to really be very focused on large utility scale projects. We have some deep competencies there. In addition, I would have alluded to the fact that we are building significant capabilities and we are focusing on the commercial and industrial customers. We have some things in the pipeline now that are really very exciting, that is going to give us another source of revenue, profitable source of revenue, of course, and we are very excited about that. I mentioned that we have just hired a Chief Commercial Officer, Norman Nair, who has significant experience in this area and is already making a significant difference to the business. We are going to, as I said before, manage this business efficiently. We're going to be using the latest and best technologies, and we're going to be going out there aggressively to really lead the market. And while doing this, Rachel, we want to show that we have a social conscience. And so we're going to continue to be responsible from a CSR point of view, continue to support the communities in which we work, in which we operate, as well as continue in any way we can to promote sustainable development and clean and green energy for Jamaica, because it is about us, but more importantly, it's about Jamaica's future and about our children.
Absolutely. I'm definitely for green energy, sustainable energy. That is the way the world is going. Another question from Limitless Podcast. How does the profit margin compare for solar versus wind?
So as I mentioned before, the revenues associated with solar may be somewhat less than wind, but the cost associated with solar is also less. So as I mentioned before, the return, we expect very similar returns in terms of our projections. We would have done significant financial modeling of, the capital expenditure that is put up front. We would have done our IRR or net present value, and discounted the revenues going out all 20 years, which is pretty much the life of the project for both wind and solar. And so I would say that they are pretty similar in terms of the margins.
Pretty similar. Okay, cool. Thank you for that. Ramney, I believe we answered that question. You're saying, suppose the government announced the next RFP in the budget, would WIGTON participate? So yes, WIGTON would definitely participate in any RFP. I'm gonna say that's been out there. Jerome, are there currently any opportunities, acquisitions right now in the region?
Yes, so our ambition, Rachel, is Caribbean wide. It's more than just about Jamaica, and we are actually talking to some associates in the Caribbean region. There are some opportunities in the Caribbean that we are pursuing. They're still in the very early stages, so I can't be really too specific right now. But our vision statement and our mission statement incorporates the Caribbean as a region. We want to be a force to be reckoned with right throughout the Caribbean when it comes to renewable, and we want to lead the pack in that regard.
Great, great. Thank you for that. Let me just check if I have any. Oh, Limitless podcast again. Who is your insurance provider?
I don't want to really get specific in terms of insurance provider right now because we are going through a process right now. So to the extent that that is public information, that would be available otherwise.
Okay.
I should also mention, Rachel, as we, a lot of persons are talking about margins and profitability. I may have failed to mention that one good thing coming out of we saw the credit associated with the tax, the deferred tax, but the benefit going forward is that our tax rate has been reduced our corporate tax rate has been reduced from 33% down to 25%. And that will have certainly a big impact on our profitability going forward. This was a really good initiative, I would say, by the government, because it is a definite, concrete step that the government took to encourage more participation in the renewables market. So we're really very excited about that, and that is something that directly impacts our bottom line and encourages us to participate and invest more in the renewables area.
Great, great. Thanks for that. Okay, I think I have exhausted all my questions on social media. Patrick, you have any last words you want to say before we wrap up?
No, Gary, great to see you again. Looking forward to having you on the show. Great partnership that's going on here. So looking forward to more progress with your firm.
Great. I have one final question, Patrick, Gary.
Sure,
With
Rachel.
we are aiming for the 2030 timeline. Is this based on your experience? Is this achievable?
Well, I am always of the view that we have to make declarations and we have to make large declarations, and that is what we are aiming for now. I think we have seen some concrete steps by the government, certainly in terms of the 100 megawatt RFP that came out recently. As I mentioned, we're expecting another 168. We know that the government is in discussion with JPS in terms of their ROFO. So we will expect some contribution there in terms of renewable energy. So I think we are on a path that makes it possible. It is an aggressive target, but my own style is setting aggressive targets, and that is how we make a real step change.
That is true, and these green sustainable initiatives are actually great for the country. So I'm fine with the government being aggressive, and if I'm solving, that means I know how much money I'm going to make from WIGTON in the next 5 years. So, guys, if you can do the math, if we are going to be on track for 2030, you can definitely know that WIGTON is going to be increasing its profits by at least 4 times. So we can look out for that. And, as Gary mentioned, he is, looking out for shareholders in the short term, but right now the company is concentrating on a long-term growth. They're trying to build a bigger, better WIGTON for shareholders. And with that, we'll bring today's discussion to an end. We'd like to thank our viewers for tuning in. Your support is always appreciated. Big thanks to Gary for sharing his insights with us and our viewers. It's always great having you on the program. I'd like to say thank you to my CEO, Patrick, for his contributions. Always great to have him on the show as well. And to our viewers, be sure to look out for updates on our virtual investor forum by following us on social media. We share all things forum related on our official social media pages. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Keep safe and remember, investors, slow and steady wins the race. Thank you.